Hello guys, how is it going? I believe this is a unique opportunity for all of you to learn from yesterday's live session. As I promised, here you have it, top-notch mentorship material for free here on YouTube. From the higher time frame to the seconds chart, we caught this beautiful 8 RR trade on Euro USD that gave so far a maximum of 22 RRs, among other moves on other pairs. So listen to every word that comes out of my mouth and try to learn as much as possible. So as I was saying, price was building liquidity on the sell side, building a trend line, and while price was making higher highs, volume was decreasing, which is exactly what we want to look for on a distribution. The problem with this is that later, when we had the breakout market structure here, volume did not increase as we would expect. And remember that if price doesn't break trend range with increased volume, there are two things that can be expected. One is a redistribution to then go lower, which is what happened. And the other one is make another UT here above this high and then going lower. In this case, we had another distribution, or rather redistribution here that was recently broken, and price now is going lower, okay? So the fact that price broke this structure with decreased volume, we don't have volume bars like this, we have the opposite, price going lower, 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 is the reason of why we had a redistribution. Now let's analyze this redistribution because it's rather complex. What I can see here is that we have a reaccumulation. How do I know it's a reaccumulation? Because price is building liquidity, it's building liquidity on the buy side. We have a sign of strength inducing buyers, and then spring taking out these buyers to then continuing higher. So this basically was a breakout market structure right here. After a breakout market structure, price came back to test the accumulation and continuing higher. Now here, let's see, what do we have here exactly? You can see here we have a rally up and then a quick reaction to the downside with increased volume going lower. It's not a textbook automatic rally, but we could consider it to be a buying climax or automatic rally. I don't like it, to be honest, the way it looks, but of course it won't always look like we want it to look like. Buying climax, automatic rally, and then we have an uptrust here. Well, in this uptrust, you can see if we compare the volume between this high and this high, volume decreases just a little bit. And in this case, we might consider this to be a primary supply. However, I don't like how this looks because this looks like a reaccumulation, price building liquidity on the buy side and attacking the sell side liquidity. So this was an accumulation, a reaccumulation, sorry. But anyways, this is the trend range that price used to manipulate and distribute orders, basically. Once the trading range was broken, it means that this distribution is completed. Again, if we look at volume, we have some spikes in volume here, but we don't have a consistent increased volume bars. So again, since this was a breakout market structure without increased volume, we can expect a redistribution or another uptrust. In this case, price went higher and it redistributed again. This is a distribution. And this type of distribution is the one that doesn't have UT because we have a primary supply, buying climax, so automatic rally without any kind of uptrust going higher. Okay. And why is this happening in this moment? Why? Probably because this buying climax already took most of the liquidity that was sitting here and it was already at a premium level. So the liquidity, the target for a distribution to accumulate shorts was already met, which were these clear equal highs. Since that happened, we could say that it's very probable that this distribution won't have UT. Anyways, after this distribution happened, where we have multiple secondary tests over and over again, we had a breakout market structure. This breakout market structure led price underneath this low, which is the low of the primary supply that we were talking about earlier. And in this case, we do have increased volume. you can see price is going lower and volume is increasing. So this is exactly what we want to look for distribution. And in this case, as you can see, this pullback testing the range of this distribution was the last point of supply. On supply, price came back to test it just by a little bit, touching the last point of supply recently, and now it's going lower. Now, what do we have here? We have another redistribution, price manipulating to go lower. We have a breakout market structure. And again, we have the last point of supply, which is this pullback here, coming back to test this range. Price continuing lower. And now what's going on? We are consolidating one more time. So you can see our price now is building a downtrend. We have a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Well, lower low, lower high, lower low, lower high. But now we are consolidating, so we shouldn't look at trending markets anymore for now. Why is price consolidating here? Well, we clearly have consolidation that was broken and never mitigated. So it makes sense to, oops, give me one moment. It makes sense for price to mitigate these orders and creating a consolidation or a retracement if it is possible. Anyways, the thing is that this is from a higher time frame, because we are coming from this trend that looks like this. A move up, move down, move up, move down, move up. This was the last higher low of the current uptrend that we have, that we could say is from the green color, the green color, which is this one. So let's change into green, the lowest degree that we are looking at here. So there are many options that could happen here. Since the target is at least taking out the liquidity below this low, price could do something like this and then go back up and then go lower. Like this, or price could go higher now, test this level and then go lower again. But we definitely have a bias to target this low at least as point of liquidity. So this is the next logical target. Are you following me, guys? Okay. Perfect. So what we want to look for here, we want to look for an opportunity to go short from a premium level. If we consider all of this to be a redistribution, because price is building liquidity on the sell side, building a trend line and attacking the buy side liquidity with multiple distributions, as we saw before, then this was the breakout market structure right here. Since this was a breakout market structure and this pullback happened after the breakout market structure, we could consider all of this pullback as the last point of supply. This last point of supply belongs to this distribution, which is the same degree of structure as these swings, higher high, higher low, higher high. So if anything, I would love to go look for a short from this point of interest, okay? However, if there is a completed distribution down here, we might anticipate price going lower without even retracing to this level. So let's see what is going on the 15-second chart. Okay, so here on the 15-second chart, I can see a change of character here, buying climax to automatic rally, referring to the most recent price action. Then we had a UT here, uptrust, meaning that this could be, well, this now is a minor breakout market structure because we are still within the trading range of this redistribution from this low to this high. So if we break this low, then price can continue going lower Okay, there we go. It is breaking. The problem with this breakout market structure is that it's happening with decreased volume. Now volume is increasing actually. So what can we expect now to happen? We can expect two things: a backup and then continuation lower. Yeah, that's pretty much what we can expect. So if price ever comes back into this level, we have an inefficient price action. This is the main order block here. So this could be a trade that can be taken. Stop loss is big, 12 pip. It's big enough to me. But since we have broken, well, wait. So we have to pay attention to a very important sign here. You see how high the volume is here, and price is not going anywhere. If we are on a downtrend, the volume is increasing because price is going lower, and we have high volume at the bottom. Such high volume and price not continuing, not making progress to the downside, makes me think that all of this selling pressure is getting absorbed by smart money. And since we just grabbed the liquidity below this low and we are hitting another level, discounted level, we might be about to see this potential scenario where price starts going higher to grab internal liquidity and then continues going lower. So even though we have a distribution with a breakout market structure, the fact that we have high volume and price didn't go lower makes me think that this is about to reverse very soon, or at least the possibility of price reversing very soon has been increased due to this volume. So in this case, what we can do in order to take advantage of this is waiting for an accumulation to be developed. If there is any kind of accumulation here with a breakout market structure, we can take a long, and at least our target for any long will be to mitigate this uptrust that we just had here. But anyways, the fact that we have high volume at the bottom here makes me think that this high is not going to be respected. It's going to be broken very soon. Or at least the probability of that happening has increased. Different story would be if price broke like it did here, but we didn't have this high volume at the bottom. We have increased volume, and when price is approaching a very discounted level, volume starts decreasing slowly, and that's it. And then when price starts pushing up, volume continues decreasing, and it only increases when it hits a premium level here. I'm not entirely discarding the possibility of shorting from here, but given the volume here, I will wait for a very clear confirmation to take any kind of short, or confirmation to take a long. Okay. So looking at the 5-second chart, what can we see here? Actually, let's use this chart. Copying all of these, because volume looks way better on this one. And I should also mark the structures. We have the blue one as a downtrend. Blue. Then we have the yellow one, this one, but it's not important now. We have the green one. So we have the green one, which is this one. High, 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 low, high, 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 low, high, high, higher, low, higher, high. Okay. And what else? That's point of supply here. All of this, that's point of supply. And what else do we have? Exogenous target down there. Okay, and on the 15-second charts, we said that this was the distribution and this is the uptrust. However, we have two options now. Like we said earlier, price comes back up here and then goes lower. Well, obviously making a higher height is also possible. It's less probable in my opinion, but it's also possible. So I'm going to leave the most probable scenario for now. But anyway, since we had high volume at the bottom, now we can look at volume. After breaking this distribution, we can see we have high volume in these candles, price not moving, then we have a selling climax to automatic rally. Selling climax to automatic rally. There we go. Now this automatic rally is breaking the primary supply. So there are two alternatives currently. The most probable one is a price, well, it could continue simply going higher, but it could also reaccumulate and then go higher, or make an accumulation in spite of having broken the structure and then go higher. Given the fact that well, let's see volume here on the 5-second chart. We have decreased volume, so there are two options. Again, both are valid. We reaccumulate and go higher, or we make secondary test on phase B and then we continue the accumulation to go higher. But the thing here is that this is a change of character. So this isn't a downtrend anymore. This is now a consolidation, and volume is telling me that they want to go higher. So we will see. This high is at risk. Okay. We said that this is the point of supply here. Oh, what's going on here? Oh, this one. So this is LPSY. Change the color of this one so it's more visual yellow, maybe. Oh, what is going on with the colors today? There we go. And this is the breakout market structure right there. Okay. So this high is at risk. Now we see it as internal liquidity. Green is still bullish. Coming from discount at premium. Well, this is confusing, so I'm going to hide for now. Expecting accumulation to mitigate the LTSY. Okay, so as you can see, price is retracing again. Here, we had a breakout market structure with decreased. Well, actually, you know what? We should consider this as increased volume because price is actually increasing. So the most probable scenario is that price is going to reaccumulate here, expecting an accumulation or reaccumulation actually. And if we have a breakout market structure, then we can take a trade. Wait, let's do this. Oh, that's fine. If you guys have any question at all, please let me know. Okay, we are breaking the structure. Let's look at the 15-second, the 5-second chart actually. What is volume telling us? Well, in spite of price going higher, volume is. We have some spikes, but I don't like it. We do have buyers getting induced with this move. And then these buyers are taken out by this spring, meaning that this is an order book. The problem with this order book is that we broke the structure with decreased or sketchy volume. I don't like this volume at all. But well, sometimes in spite of having decreased volume, obviously price can continue going higher. That's okay. It's something that happens. However, I would love to see price coming down below this low because of the fact of the high volume that we are seeing now and price not going higher. This is seen as internal liquidity now. So I do expect price to go lower, then break the structure and go higher, or go lower, tap into this point of liquidity, break the structure and go higher. If any of this happens, then I will be happy to take a trade because the intention is to go higher clearly. I was high volume here at the top makes me think that this is not ready to hold this order. Let's see if any of this happened. Meanwhile, we can check out EUR/USD. Well, last time we talked about EUR/USD, we anticipated again all this move up. The target was at least the automatic rally here that we were looking at. Now price seems to be distributing, building liquidity on the sell side, but it's sketchy actually because the waves are not clean at all. This is a reaccumulation. Then we have the breakout market structure. This is the test, the accumulation. Then price continues going higher, so it's not clean. And we do have these equal lows now. So the situation here on EUR/USD is a little bit sketchy because on the higher time frame, we do have all this imbalance and all of these highs that now are internal liquidity. So we do have a real chance of making this move up, which is one of our biases. Remember, we have different bias for USD. I don't know. Oh, here they are. Because we are at a very key level. We have one of the bias is to go higher, tap into this buoy, making then a lower low to grab all of this liquidity and then pushing higher. The other bias is simply pushing higher from here, and the other one is breaking lower, again to the same level, mitigating the imbalance, and then going higher. All of these options point higher because the weekly target is this high, and it hasn't been met yet. That's why all of them point higher. Well, for any of these options, we would have to wait for a clean confirmation. Meanwhile, what is price supposed to do from this spring? Continue on going higher, right? But what is price actually doing? It's failing to go higher and it's trying to go lower. So here on Euro USD, the next logical move is going to be taking down these equal lows. So the fact that price is failing to continue an uptrend on USD and having minor breakers of market structure to the downside, for example here, it's an indication that price obviously doesn't want to go higher, wants to go lower, and we have clean equal lows. So the next logical target for price is going to be going below these lows. Now, since we have a break of market structure here, well, we have a lot of volume here at the bottom. This is insane. Internal liquidity. So my bias will be to go below these lows. The only thing that would change my mind is if we see obviously an accumulation. For now, it seems like this was a distribution here. Price was building equal lows. Here we had an inducement of sellers with this move down. Then the sellers were taken out by this move up that tapped into this point of liquidity just by a little bit. And now we have a break of market structure. That means that this is an order block. So price could continue going lower from this order block. And if we look on lower time frames, we can see we have a Wyckoff distribution, PSY, buying climax, automatic rally, test, break of market structure, redistribution. Well, what's going on here? No, wait, give me a moment, guys. Something's wrong with my monitor. I don't know what's going on. Anyways, we have a break of market structure here. We have a redistribution, and now this redistribution was broken as well. So that means that this is a valid point of interest for EURUSD. When price gets into this level, we could be looking for a shorting opportunity. For now, price is showing willingness to go higher because we have a kind of reaccumulation here. We have it started like a distribution here, and then we have a big spring and a break of market structure, meaning that this is the backup. So price now is likely going to go higher. Let's see, how is volume looking like? It's looking good. So we can take this trade now. Market execution, stop loss there. It's going to be a very small scalp because there isn't enough room to higher, to be honest. But at least to have a nice scalp up to this level, as minimum, it will be nice. However, if you don't want to risk it, you can wait for a clean confirmation to take a short, which is the highest probable, but I do see a potential move up like this one here on EURUSD. Meantime, GBP/USD is continuing the up move. It didn't give any kind of retracements whatsoever, but it might do a liquidation of the sell side liquidity very soon because it's building equal lows everywhere. We'll see. Anyways, let's say that price continues going higher on GBP/USD, which is the bias to mitigate this last point of supply. Once it gets to this level, we can look for a shorting opportunity. The retracement to enter a long might happen right now on GU since we are hitting the UT and we have built liquidity on sell side. So a move down could happen very soon. If there is a move down, then it is an opportunity to long, in my opinion. We'll see. Meanwhile, what's going on with Euro USD? If Euro USD takes the same path as GBP/USD, that means that the TP for this trade can be at least these equal highs. And we have a similar situation. All of this was a distribution on Euro USD. Actually, let's see. We should look at lower time frames. Okay, here we have a buying climate, automatic rally test, breakout market structure. But it's not clean. Okay, yes, we have this breakout market structure, minor breakout market structure. We have a distribution at the top here as another test. That distribution was broken and it was respected here. Price continuing lower, breaking all of this structure. Here, oops, all of this and all of this. And then what happens? We have another test, last point of supply. So all of this move up is the last point of supply, the most recent distribution. So a real TP, if this goes right, could be even up to this level if you want to manage the trade, which is 8.28 RR. Quite nice. But well, we'll see. We should, in order for it, of course, in order to get to this level, we need to first break this level, which is a distribution. And I'm not liking this price action that we have here on lower time frames at all. This is looking like a distribution. it might end up being a reaccumulation if price quickly bounce up to the upside now. However, let's see, we have high volume on the down move. No, this is not looking right. What if we consider this to be buying climax to automatic rally? Up trust, failed on transaction, and then up trust after distribution is possible. The only thing, I mean, for the bearish scenario, the only thing I don't like is the bullish volume that we have been seeing. We do have a bearish breakout market structure here, this distribution. So price has a real chance to go lower now. Oops. This trade is based on this backup, the backup of this reaccumulation that we see here. We'll see what happens. Let's see what is volume showing us here. I put on this down candle is around liquidity. How inducement of buyers. Well, if this doesn't work, then we should have waited for the bearish scenario to play out. What is the problem here? Let's see. Breakout market structure. It's bullish. Volume increases, but then decreases at the top. Asset distribution should. High volume at the top, price not going anywhere. By lower time and distribution. Yep. And now we have the breakout market structure with increased volume of the distribution. So yeah, price is probably going to go lower. But not clear enough. There is something about trading, guys, that you shouldn't be afraid of losing trades. On the opposite, you should accept the fact that you're going to lose trades. And every time you lose, you shouldn't have bad feelings. If you do have bad feelings, then you should fix that, okay? Because every time we open a trade, we don't know the outcome. We have an edge on the market, and that allows us to make money. But that doesn't mean that you're going to make money every time you open trade, okay? This is a long-term thing. So fortunately, in my case, I have a high win ratio, but that's not fortunate from the psychology point of view, because every time I lose a trade, I am surprised that I'm losing, okay? And it shouldn't be like that. Of course, I'm still working on it. I'm not well, at the beginning of my career, I was a disaster in terms of psychology. Now I am a Mercedes-Benz on psychology compared to before, but the thing is that you shouldn't be afraid of losing trades. It will always happen now, and 10 years from now, if you continue trading, it will always happen, because it has always been like that. The outcome is not 100%. So something that you have to keep in mind. GU is distributing at the top here on the UT. We can clearly see change of character, buying climax to automatic rally. Then we have an uptrust. This can be considered to be the perimeter supply. If we look at volume, what is volume telling us? We have this volume here at the top. We have high volume at the top here, price not going anywhere, and high volume when going lower. However, there is too much volume, price is not going anywhere here. So there are two options here in GBUSD. We either have a redistribution and then go lower, or we have another UTAL and then we go lower. But this move lower that is likely going to happen will be nothing else than a retracement of all this move up. Because remember that our bias for GU is to go up here, okay? You can see here USD is kind of redistributing, building liquidity on the sell side, attacking the buy side liquidity. Let's look at volume. What is volume telling us? But we do have high volume at the top here. And price going lower, we have high volume going lower, and then price going lower here. Now, well, in spite of having a distribution, this is still looking bullish to me in terms of volume. Well, we will see. So far, this is good. We had a distribution that turned out to be a reaccumulation as we were expecting. The point of interest, this backup held very good so far, okay? We should be able to make a nice leg up now very soon. And well, this could be a barrier for price to not continue going higher. Hopefully, if we are lucky enough, we are going to see a fast move going through all of these highs, which in that case would be very optimal for our trade. But if it doesn't happen, then we should consider the option where price retraces at least. Okay. Yes, these are equal lows, but these equal lows were created after price grabbed the liquidity below these equal lows that were also created. As you can see, we have equal lows here, a tiny stop hand, and then a break of market structure. Then price came back to this order block that created the stop hand, respected it, and from here is where price advanced higher. So even though we have equal lows, if the equal lows are created after price already grabbed the liquidity, then it might not be equal lows to engineer liquidity, but rather it's a coincidence because smart money is accumulating orders from a discount level, okay? And well, this is already 1 RR. That's good. Have any of you guys have taken this trade or not? Okay. Nice. So let's see. If we are lucky enough, we are going to see price going through all of this very quickly. But remember that you can take partial, you can close the entire profit. That's totally up to you. If you risk 1%, you're already 1% up in a few minutes. So that's great. If our bias for GU is correct on this lower time frame to make a retracement and then go higher, then we are probably going to see that on USD as well. Very probable. A retracement and then continuation higher. This retracement might take USD to its level and then continue going higher, or to make a lower low and then continuing higher. Both options are available. So let's see. GU, what is GU doing here? It's continuing the distribution that we were looking at, this one. Remember, we said we have a redistribution and go lower, or another UTAL and then go lower. We had a UTAL here. However, we'll see from here, price should go lower, because if it makes another high, I will be doubting if this is a real distribution or not, because it should go lower. We can see a price made this move down and volume increase. So it has all of the chances to go lower. If I had to bet, I would say that price is very likely going to go lower now. Very likely. So EURUSD will probably follow. But maybe let's say that this turns out to be a reaccumulation of GU following the same movement. Maybe EURUSD respects this level in that case as well, because this level is the reaccumulation that was recently broken, meaning the price should continue going higher. We'll see. I think this trade is good to go through these highs, but I'm not 100% sure, to be honest. I mean, I never am 100% sure, but I know where I'm more sure than other times. We'll see. We'll see. If we analyze the volume here, how we broke this structure, this reaccumulation here, break of market structure. The break of market structure happened with increased volume. It's not bad. Not bad at all. You can see a volume from this low has been increasing, making higher highs, meaning that this could be the backup of this reaccumulation. For this backup, what we want to see is volume increasing again, ideally. Because if volume makes a higher high, but it doesn't increase, then we can expect another move down. Like for now, volume is decreasing. Let's see, maybe we have a high volume candle here. Yes, but overall volume is decreasing, which I don't like at all. So we might expect a potential move down. Anyways, let's see, where does this long take us? So far it's 1.5 RR, which is not bad. But this break with decreased volume, I don't like it at all. We might see something like this now. It's very possible. And there we go. How did I know this? High volume at the top, price not going anywhere after grabbing liquidity. All of this movement up was with decreased volume. If price is coming from grabbing external liquidity above buy side liquidity, where is the next pool of liquidity? At discount level, this low. And there you go, it was just tapped. So now price, if they want to go higher, there might be some manipulation here. But then in the end, it might continue going higher if we are right. The only thing, there we go. GU is grabbing all of that liquidity that we were expecting. Again, how did I know that this was the last Utah volume? As you saw earlier, you can watch the recording, but basically we had a lot of volume at the top, a lot of volume coming lower. So basically that's seen as a sign of weakness. And since this sign of weakness is happening at the beginning of the potential downtrend after the distribution, then it was very likely price to go lower at that moment. However, well, this is the retracement we were talking about earlier. So this low is still the internal liquidity. We might see this getting tapped now. It is very possible. We have two options. Either price taps this level and then goes higher, or we make a lower low, taking this external liquidity, and then we go higher. If I had to choose one, I would say that price is very likely going to go underneath this low. Because if we ask the question, where is price coming from? Price is coming from a higher time frame bearish level, which is the Utah that we have been talking about. And since this level hasn't been mitigated, actually not mitigated, since this has liquidity below this low, it is possible for price to tap into a low and then go higher. But we'll see, both are possible scenarios. We just tapped this liquidity, as you can see, just by a little bit, not enough, in my opinion. Well, we went below that low, but I do see another leg down. I don't think they are going to leave it just like that. Well, it's possible for them to just tap it like that and now simply continuing higher. There is no need to speculate. You can work with what price is showing. So if there is a breakout market structure with increased volume, a trade can be taken. For now, we can consider this to be a selling climax, so automatic rally. And this would be the primary support. Let's see what happens. If it is going to be a long accumulation, then we will have a secondary test of phase B, and all that stuff. But let's say the price wants to go lower actually, and our bias to go higher. Well, let's say price distributes here, creates a redistribution. Then we know this low is going to be targeted. And in that case, we will look for a short-term short. If this happens, if a distribution happens. Obviously, if we have an accumulation, we know price is going to go much higher. Are you guys following me? Because I have been talking a lot and I don't receive feedback from you. I don't know if you're understanding all of what I'm saying here. Okay. Remember, if you have any question at all, you can ask me. You can turn your mic on. No problem. So, for example, this trade, I didn't call it, but it's a setup that I like to take. When we have an almost finished distribution, we already had the Utah. We have high volume indicating that price is very likely going to move lower. Well, I take a short, for example, from this order book like that. It's a riskier type of setup. So the win ratio for this type of trade is lower, okay? But well, it's a setup. If you know how to read volume very well, your win ratio is going to be high no matter what. That's the good thing about volume. So going back to GU, what do we have here? We have a breakout market structure, but now price is distributing. We have a buying climax. So automatic rally, changing the character. And this is a preliminary supply. Again, changing the character. Remember that change of character is a move that retraces around 100% from the previous swing, and it's bigger than the previous swing. So the previous swing was this one, previous Y, and then we have this move changing the character. Price wants to go lower. It would be ideal to see something like this happening. Otherwise, if price starts going lower now, it might build a reaccumulation to go higher. We will see. Guys, I'll be right back in a few minutes. Okay, be right back. Guys, can you hear me? Okay. So what's going on here? Well, GU did what we expected. What is happening with USD? Same as we expected. Price came back to the accumulation that we saw, the reaccumulation. Okay. After grabbing the liquidity, after the move down. So let's see if we can shoot up now to the skies or not. So far, so good. It looks like we do because this is a reaccumulation. We have a change of character. Buying climax to automatic rally. Then we have a UT. And after the UT, we have a selling climax to automatic rally. Secondary test on phase B. Then we had a failed atlas action. And then we have the spring. So technically, after breaking this high, now this reaccumulation is completed. So if we wanted to, we could take another trade like this, but the stop loss should be very high, very big, sorry. But it's not needed since we are on this trade, which is way better. Now these highs are probably going to be taken down, very probably, shooting price much higher into potentially this level, hitting 8 RRs. But of course, if you're in deep profits, you don't need to hold for so long. You can take profits wherever you want, obviously. Very good, Doug. Very good. Let's analyze volume. Like Doug said, let's see. We have this low with this amount of volume. Boom. We have a lower low with decreased volume, and another lower low with low volume as well. So basically, we have a tendency of price going lower and volume decreasing. Now the price is going higher, volume is boom, increasing. You see? That's exactly what we want to look for an accumulation. Now price shooting higher. Same with GU. Are you guys still holding this trade or are you closed already? Nice, very nice. We are probably going to see another retracement now that we have so much inefficiency, price action. Well, now these highs are very, very likely going to be taken down. Very likely. If they are not, I will be surprised. Well, it's something that could happen. This trade already how much? 2R, well, it's a scalp. So if you're going to be a funded trader, you have to get rid of the wrong way of thinking of trying to catch high RR trades, because high RR trades can be done, but they come with decreased win ratio, and decreased win ratio comes with increased drawdown. So the lower the win ratio is, the bigger the drawdown is going to be, and the more difficult it's going to be for you to respect the risk parameters of the prop firms. Okay, so you don't need to make 100 Rs per day. Okay, you just need to have a consistent high win ratio strategy in order to achieve the goals. So for example, on this trade itself, even if you close at 1 RR, it's more than enough because it's a high win ratio setup. Okay. And you can take multiple trades like this in one single day, or multiple trades in a few weeks, in a week, for example. How many of these trades there are? If you actually sit and spend hours in front of the chart in one single day, you're going to have a lot of setups on the second chart. Of course, if you like scalping, you don't need to do what I do. Okay, you can trade intraday, that's up to you, but the way I do it is I sit down like 4 hours and I can find like 4 trades. And in those 4 trades, I can make 5 hours. I prefer the higher win ratio because of the prop firm risk conditions. Are any of you guys going to participate on the prop firm giveaway that I'm going to do on my YouTube channel? Are you going to trade that or not? So you have to open a 100K demo account, link it to my FX book. It needs to be verified, and you have to start trading on August 3rd. And it's going to be running for 30 days. After 30 days, the person with the most amount of profits, respecting a maximum of 10% drawdown, wins that challenge, that account, which is this one. Looks trading. This is not the best prop firm at all, but at least this was a free account. Where is the bad thing about this is that you have 4% relative drawdown. Okay, so at any time you shouldn't lose 4%. That really sucks because it doesn't give you enough room of drawdown to trade with. But the good thing about this is that you don't need to make a lot of money, because if you do this account, which is the one I'm going to give away, the 100K, 150K, you can trade up to 10 million and even more. So even by having a 4% relative drawdown, you can manage up to 10 mil, which is really great, in my opinion. So it doesn't matter. This doesn't matter. You just diminish the risk and that's it. If you are a good trader, you can do that. It's the same as trading a normal account, but you diminish the risk. That's it. And once you hit the target, you can duplicate your account over and over again until you get to 10 million, which is insane. Imagine doing, because here the target is 900 for a $15,000 account, so it's 6% target. If you hit 6% on a 10 million account, $600,000 in profit, and you get to keep how much? I don't know. What is the profit split here? Oh, 60% to 65% to the trade. So if you have the 10 million account and you made 6%, which is the target that you have been hitting in order to get to 10 million, you get to keep $390,000. Imagine making $390,000 per month. You're a millionaire. That's a Lambo every month, exactly. Yeah. Yeah, man. The good thing about trade is that there is no limit of how much money you can trade. And if you get to 10 million here, you can easily get any investor to give you a few more millions. Easily. Very easy. Another question about the volume you pointed out on the accumulation with USD and the distro with GBPUSD, that both just happened there. You'd say that the high volume of the Utah of GBPUSD was a good sign that price was going to go lower, but then the lower volume at the spring of USD was a sign that price was going to move higher. Yes. So we are looking for different volume levels on a distribution compared to an accumulation. No, it's the same. These are called signs of weakness. High volume at the spring, UT, only at the peak, not the entire wave. And lower volume at the peak as well of the spring compared to the previous low price. Does this make sense? So what is the reasoning behind it? If we have decreased volume, it's telling us that the job that smart money is doing to diminish the liquidity on the sell side, in the case of an accumulation, is being done properly because we have fewer and fewer sellers stepping in on these lows, buyers. And since there are less and less fewer and fewer buyers, there are going to be less and less stop losses. And if there are less and less stop losses on each one of these lows, volume should drop, drop, and drop. On the contrary, if price is hitting, let's say, higher time frame level, for example, in this case, why was there high volume at this top? Because price was hitting a higher time frame level, which was this UT, this order block. So when you combine the fact that price is hitting a higher time frame point of interest with an distribution or an accumulation is the same, you might see high volume at the top only at the peak. If there is high volume and price is not going higher, it's a sign of weakness. Price wants to go lower. Okay. Different story is if price is going higher and volume is increasing at the same time. In that case, it's a different reading. It's not the same. Make sense? Okay.
Oh, come on.
Who said come on? Anyways, GU working like a clockwork. Now that we have just broken this level, this is the completed, well, yeah, complete accumulation price rate to shoot up is going to go up into the last point of supply here. Very soon. And USD might follow as well. Yes. So how was it set up? The setup was the following. First of all, we engineer equal lows here. So we know there is liquidity here. Secondly, we have a bullish bias to go back into this level to then continue going lower. So this is a buy to sell basically move. Third, we are hitting a higher time frame level, which was, well, all of this area, you know, it's an accumulation. This is the backup of this accumulation. So this is a higher time frame bullish level out of this range. So after taking out the equal lows here, the liquidity, what happens? If we go to the 5-second chart, what do we have here? We have an accumulation, we have a breakout market structure with increased volume, meaning that all of this move down is the backup of this accumulation. After the backup here was broken again to the upside, we have another reaccumulation or a higher low if you want, because we cannot say that this is a reaccumulation, but we can say this is a high low. You can see price came back down, grab internal liquidity below these lows, and then made a higher high. So basically this can be seen as the mitigation of the backup of the accumulation. Basically a point of interest. And asking the question, is there enough room to go higher? The answer was yes. Oops. We had room to go higher. And since we did have room to go higher, I called this trade. A long from here, market execution because price was here at that moment, stop loss down here, and that's it. We didn't even complicate it. When price was approaching this level, you can see this low held very nicely. Basically, this is an order block. Small money sold to capture the liquidity below these lows, and then broke the structure, order block. And then here we have a reaccumulation. All of this range was a reaccumulation. Why? Because we have a change of character as a distribution, and then we have a reaccumulation at the bottom here. Price is not doing what it's supposed to do according to the distribution, which is going lower. It's actually reaccumulating. So what is it going to do next? It's going to go higher, obviously. So after this was over, well, this here we were already in the trade because this was a confirmation to me. But anyways, later after price finished this accumulation here, by breaking higher here, we have a breakout market structure. We identified this as an accumulation, which is part of the spring that grabbed the liquidity below these lows, a point of interest. So we anticipated price again to go from here below these lows and then continuing higher. And well, that's what happened. And while price was doing this, we had another reaccumulation. As you can see, price is building liquidity on the sell side and attacking, building liquidity on the buy side and attacking the sell side liquidity over and over again. So this was another setup. After breaking its high, this is already another buying opportunity with stop loss here. Of course, it's not the best setup in the world, but it's a setup itself. There are ways to refine this if you want. But anyways, did you get why we bought here? Or do you have any question? Excellent. And there we go. The equal highs were tapped. So now that this liquidity is being targeted, you should now actually consider following this trade very closely because there is a chance that price might go lower. Our buy is to hit at least this point of interest to go lower. Well, you should now manage the trade very closely if you want to get the most profit out of it. Currently sitting at, well, almost 3 hours. Nice. The spring, we should not pay attention to the building liquidity down. Yes, you should. However, volume is going to reveal the truth about the consolidation. In this case, this was looking like a distribution, but volume was telling me otherwise. It was saying me that price wanted to go higher. Why? High volume at the bottom. Why is there high volume at the bottom and on the move up? Because price is buying. Smart money is buying. Why is there decreased volume when price is making a move down? Because smart money is not selling. Why is there increased volume again when price is pushing higher? Because price wants to go higher. Why is there decreased volume on this move down? Because smart money is not selling. So you can see every way was telling you that smart money was buying, not selling. Okay. So that's why, in spite of this kind of looking like a distribution, volume was telling you that smart money was trying to buy. Remember, when price is pushing higher for a healthy uptrend, we want to see volume increasing. When price is pushing lower, we want to see volume decreasing. When price hits a discount level, we want to see volume increasing again to push price higher again. Then when price retraces, again, decrease volume. That's what we want to see for an uptrend, okay? And since we assume that this was a spring at this moment, this was potentially the start of phase V when smart money starts, or the price starts making an uptrend, making higher highs and higher lows. Make sense? Okay. So for example, looking at this chart on the 5-second chart, what do I see? I immediately see the liquidity and where is price sitting now. We are starting to touch this, which is a void on the high time frame, all of this area. We are building liquidity on the sell side. So if I wanted to take another long, I would probably do so after price grabbed all of this liquidity below this trend line, which is probably going to happen very soon. And my points of interest would be this level right here and below this level as well, because now this is internal liquidity. It's very possible for price to come back down below that level. Oops. Into this accumulation again. So basically what we are saying is that price, well, now we started, you don't see, we have something like this or something like this, also possible. So we have a down move with increased volume. Price is very likely going to continue going lower. I'm not going to take this scalp, but this is something that it might actually work as a scalp. I'm not going to take it. I'm not saying that you should take it because this is a vague analysis, just testing, and that's it. Oh, okay, this is USD. Nice, man, nice, very nice. Very nice. You see, vague analysis, you shouldn't take it. If you guys are making money on the USD trade, if you want, you can share on showroom. If you want to brag about it, you have that ability as members. Let's see what's going on with gold here. Okay, so your trade on the 15-second chart in GU, let's see. Okay, I see. So you took a trade after we grabbed the liquidity that was our target of liquidity, right? This one. Oh, here, what I call this reaccumulation, right? This was your trade? Or not? Yeah. Nice. Very nice. Yeah, but you pushed the bottom, so congratulations. Okay, so this trade is running how much? 3.21 hours, which is not bad for a trade that took how much it took so far. Well, almost an hour to make 3%. It's not bad. I mean, it's not bad at all. Hello, Rod. How are you doing, man?
Hello, mate. Good, good.
Well, Rod, you joined the party late, but we took this trade on USD along, and we are looking to potentially short from this level here. So this is going to be the next setup to be formed on USD. This short might lead price to continue going lower, which is our main bias below these equal lows. But if we are wrong, then at least it's going to provide a retracement. And if you know how to capture that on a lower time frame, it's more than enough to trade with. This long here seems to have, it looks like it is a big stop loss, but it's actually how much? 2.9 pips. It's not a big stop loss. For me, this is big because I am used to trade on the lower time frames and my stop loss are smaller than this. Oh, well, it is the setup that we have been given by the markets. Oh, I see we have a nice distribution happening here on NCD USD. What's the story behind this? Oh, it's been a long time since we talked about this, but we were anticipating price to come back into this point. I see it did come to this point, and then we had a distribution, a break of market structure, and now we are having another distribution maybe. Let's see, we have a break. We have a stop hand here, grabbing liquidity internally above these equal highs. You can see this is turning around at the beginning of this distribution, which is not a coincidence or close to the beginning. We probably have a backup here on the lower time frame. Let's see. We have a break on market structure right here. That means that this is the last point of supply. The last point of supply was touched just by a little bit right there. Price continues going lower. This is happening after price grabs the liquidity above this all high. So that means that this was the distribution. Well, actually, no, the distribution. This was the first lower high. Then we had a lower low. Then we had a lower high, and now we have a lower low. So this is the current downtrend that we are seeing. Now that price is approaching this lower high, first we need to identify what is the next logical target of liquidity. Otherwise, we are not going to know where price is going. Well, since price is coming from a high time frame level, which is this level, and we have a discount level down here, it will make sense for price to continue falling down to this level and then try to go higher again. So since we have this target, and well, this order blow, all of this move down was mitigated by this tiny little consolidation here, we could have this as a midterm target for price to go to. So I'm trying to look for a reason for price to continue going lower, and we have that reason. There is still room to go lower. Since there is still room to go lower, now we come back and analyze this. What do we see? We're approaching a lower high here, where smart money has previously distributed orders from accumulated shorts. The main order block, as we can see, is this move here. Why this one? Because this is the last move, grab liquidity above high and produce the break of market structure. Later, price came back into this order block, failed to go above it and continue going lower, making lower lows, lower highs, lower lows. Of course, after grabbing external liquidity of this low, they accumulate orders. Why? Because they want to grab again internal liquidity above these highs now in order to accumulate more shorts. And in order to do that, they are distributing. So since they are distributing, we are seeing equal lows, price attacking the buy side liquidity over and over again. Let's see volume. What is volume telling us? Well, volume here is multi-session volume, so it's very difficult to analyze. This is what I don't like about intraday setups when they are happening within several days. Is the volume is very difficult to read because it depends on the session. Anyways, let's see if we can find anything here of value. We have this high with very low volume because it's the start of the day. We have this high with very high volume because it's the middle of the session. This is in the middle of the session. It is a higher high, but volume is decreasing. So we can have some valuable information from this. Then we have this high, which is in the middle of the session. And volume is actually increasing here on the move up, decrease not only at the top, and then we have increased volume on this move down. Unfortunately, for this story, this movement up with increased volume and this movement down with very high volume only at the bottom is telling me that this is still bullish, unfortunately. So that means that this might turn into an accumulation or a reaccumulation, and price might go higher again. The only thing that would change my mind is if we have a redistribution and then we go lower, or we have another Utah, a distribution, and then we go lower. Otherwise, this is still bullish to me. So that means that this is not ready to go lower yet. It's kind of fighting. So in this case, the only thing that can be done is playing within the liquidity pools that we have available. For example, these highs, these equal lows. So if we have a redistribution before breaking below these lows, then we know price is going to go lower. In that case, we will look for shorts on lower time frames. But if we have an accumulation, we know price is going to go up with a high. Or at least try to. So if we go to the 1 minute charts, what can we see here? Right now, in my eyes, I can quickly see that we have a sign of strength, inducing buyers doing a minor breakout market structure. These buyers place their stop loss below these lows, and those lows were attacked. So let's see what is volume telling us in this story. Let's see. We have high volume, change the character, second test on phase B, sign of strength. We have a spring, but overall volume is decreasing when price making lower lows. And now price is trying to go higher, and volume is yeah, it's not increasing by much. So we have a technical breakout market structure because price made a high just by a little bit here. Well, I don't think we can even consider this to be a technical breakout market structure because it didn't go much higher. It went just how much? 0 point something pips, 0.3 pips. So what can be expected now in terms of Wyckoff? Since we have a move up with decreased volume, we do have some high volume at the beginning here, and we can say that this is a reaccumulation. I would say that the next logical move is for price to come back and test these levels with a nice reaccumulation. And if we see another breakout market structure with increased volume in this case, then yes, we can confirm that price is likely going to push higher. But for now, my bias is for NZD/USD to go a little bit lower, to attack some of this internal liquidity below these lows, and then maybe reaccumulate at this level, which is a reaccumulation. Unfortunately, there isn't an easy way to do it. You have to read it just like I did, selecting the picks, and if we have a UT that is happening on the same session as the previous pick, and you have decreased volume, then that's an indication of a sign of weakness. Okay. But it needs to be the same session, because if it is another session, then you can't compare them. That's the problem. Well, EU is doing what we supposed it would do, making a retracement into either this level or this level right here. Let's see which one is going to hold. 5 seconds redistribution. I guess you are referring to this one, right? If you are referring to this one, yes. However, no, yes, it's a redistribution. We have a change of character. building liquidity on the buy side, attacking the buy side liquidity, touching a higher time frame level, which is this distribution. This distribution is pretty clean to me. Testing and then going lower. So basically, this was the last point of supply of this distribution. So very nice. Now we are hitting this discounted level. We can clearly see we have a gap here. So this gap is going to be touched. Well, it was just touched right there. Usually when we have a gap like this, price touches and bounces up very quickly. Like it's happening right now. So anyways, this is no confirmation of anything whatsoever. I would like to see a break on market structure, accumulation, any setup to take along. However, we need to also consider the fact that price might get to this level. So since we have this option as well, what could happen is that price, let's say, starts going higher from now, but it starts redistributing. We have this as our point of interest. This is the last point of supply of this distribution. If something like this will happen, then we know price is likely going to go underneath these lows. If it starts redistributing and touches a high time frame level, or it could simply continue on lower, just like it's trying to do now. Yeah, at this stage, it will take down these lows, obviously. So now we are going to see a fight between this accumulation and this distribution. So what's going to happen now? Very likely is price going to get to this level, is going to do some stuff and whatever, going to move higher, is going to get into this level, it's going to mitigate. And here, this is the decisional point between the recently created accumulation and the recently created distribution. Here is where price is going to accumulate and go higher, or distribute and go lower. But given the fact that this is a higher time frame accumulation, this is a distribution at a higher time frame level, these two moves are very possible. That's why I'm saying that price is going to go higher, then lower, etc. Okay, all of these move up, guys, can be seen as a sign of strength of an accumulation. So let's clean this chart. Well, this high was broken already, so the bias was correct. Let's see what is going on here. We have, look at the 1 minute charts. Well, actually, yeah, this is looking like a redistribution already. It was a distribution, we have a spring, we have a break market structure. This break market structure happened with decreased volume. I like that for the move down. So let's analyze what is going on here. This was a distribution. The high of the distribution was taken. So we could see this as a break market structure. However, this happened with decreased volume. We don't see consecutive high candles or bars here on volume. So what is this telling me? It is telling me that price is now likely going to attack this low here and maybe this low here. So something like this and go higher, or something like this and go higher. Where is this going to happen? Well, if we look at the lower time frames, we just had a distribution leaving a void behind. So if I had to choose one place, I would say from this distribution, ideally this order block from here. So if there is any kind of confirmation here to go lower, I think this is a real scenario. If price gets to this level, otherwise, if it just continues going lower, it's okay. We'll see what happens. Okay. Euro is getting to this discounted level. Let's see if we have a move up or not. It doesn't look like, because price is moving very fast, but that's okay. Sometimes it looks scary, but it's not scary. Let's see what happens. Here is it. Okay. Going higher first will make sense, but before going much lower, but let's see. We don't have to gamble here. If there is any clean breakout market structure, we can take it long. Let's see what is going on here. High volume trying to go higher, so this is already showing me that there is a potential change of character coming. Or at least we see high volume and price not moving lower. If we are on a downtrend, we are seeing bullish momentum here in this candle. This doesn't mean, again, that price going to go higher, but it does mean that it might start entering on a potential consolidation. But well, we don't have a change of character yet, so we cannot say that. Okay, we have a breakout market structure right here. But volume is here increasing. And this is happening at a discount level. I think, I don't want to read. No, I'm not sure. No. You know what? Volume is decreasing now. I won't take it on here. Because I'm not completely sure about these volume bars. It might make a big move up now. I feel it, but I don't want to risk it. Yeah. Anyways, guys, I'm going to close the live session now. I hope you enjoyed and made money. If you made money, congratulations. If you didn't, it's because you didn't follow this trade, but that's it. It's okay. But the most important thing here is that you learn how I read the market, not so much the money that you can make, which is awesome that you can make money, but that's the most important thing here, learning how I got to this trade idea. So you can then replicate it yourself and make as much money as you want. So thank you all for coming and see you guys tomorrow, okay?